What is up, everyone? I'm Bill Ryman, your broker builder, and this is your July market update. And a lot is going on. I mean, a lot. And obviously, we know what the big news is, and it just came out. We are officially in a recession.
There's going to be a lot of chatter today on Wall Street and among pundits about whether we are in a recession. But if you look at our job market, consumer spending, business investment, we see signs of economic progress in the second quarter as well.
Well, not officially, according to that guy, but we are in a recession because obviously GDP fell for the second quarter in a row. And by definition, that means we are in a recession. But obviously, the White House is trying to change that definition to something else. But we all know where we're at right now. But what's this mean? Where are we going? What's happening in the real estate and in the building markets? We're going to get into that here as well. But the breakdown of the economy has contracted for the second quarter in a row, a double dip, and widely seen as a recession. For a recession to become official, the National Bureau of Economic Research must declare that we are in official recession, which they have not done yet. But GDP officially fell 0.9% in quarter number two, according to the estimate. So GDP fell 1.6% in quarter number one. That's two consecutive quarters, meaning we are in a recession.
No, God! No!
So what does that mean? Let's go into the building market. Obviously, confidence among builders in the nation's single-family housing market has fell. So reported right here by the National Association of Home Builders. It fell in July to the lowest level since the start of the pandemic. The National Association of Home Builders Wells Fargo Housing Market Index, a survey designed to gauge market conditions, found builder sentiment dropped 12 points to 55, the mark to the largest single month drop in the survey's 37-year history, in exception to April 2020 when the reading plummeted 42 points. So what's causing this? Production bottlenecks, rising home building costs, and high inflation are causing many builders to halt their production, halt construction because of cost of land, construction, and financing exceeds the market value of the homes. Obviously, interest rates have gone up. They continue to rise, and that is putting a good punch to the stomach to the building and real estate industries all at once. Going into Fortune right here, Fortune had an article where they talked about in the early 80s how home builders mailed 2x4s to the Fed chair Paul Volcker at the time and hoped the central bank would relax its inflation fight that saw mortgage rates top 18% at that time. Of course, the Fed didn't hold off until 1981 recession helped tame the inflationary spike that began a decade earlier. Historically speaking, the Federal Reserve's inflation fighting playbook always starts with housing. That's where it all begins. That's what we're starting to see now. So on the construction end, what am I seeing personally? On our end, we are seeing a little bit slow as far as new builds coming in, people calling, acquiring to build homes. I'm still having some people acquire. It's just not as crazy as it was. But there are some factors into this. We are going back to a normal market here in Southwest Florida. People got so used to, and I said this on my last update, people got so used to, everybody being here year round because Florida was open during the pandemic and we had so much people here staying here during the summers. Now everything's open back up north. So a lot of people are heading back up north once again for the summer, and we are back to our kind of that season cycle. New home sales are down 13.4% in 2022 on a year-to-date basis. So new home sales are down. They're continually going down. So builders saw sales decline significantly as buyers were priced out of the market on higher interest rates and ongoing home building and development costs, including building materials. This comes from Jerry Conter. This goes back to the big guys like the Pulte's, the Lennars, the DeVostas, those type of guys that are doing mass quantities of homes. It's really affecting them right now as we speak. So Bloomberg, another article, new U.S. home construction fell in June to the lowest since September after plunging the prior month, driven by a slide in single-family home building, and underscores waning demand. Residential starts declined 2% last month to a 1.56 million annualized rate after upwardly revised to 1.59 million pace in May, according to the government data released Tuesday. So things are starting to slow down on the home building market right now, which my assessment, this is my opinion, things slow down because these mass developers slow down a little bit. That's going to free up resources for us a little bit more. It's going to let the supply chain breathe a little bit because it's been so constricted with product, people demanding products. So lumber, steel, all of that has already fallen 40% since last year. Will it continue to fall? We don't know. Other things will fall eventually. I don't think it's going to happen quick, though. I don't think it's around the corner. But by next year, we might see a little bit of supply chain breather coming. And this is just my opinion once again. But with all these factors happening and demand slowing down, obviously that will help supply chain pick back up. Let's go into real estate. That was my building update. I try not to keep these too long. Redfin, this article from Redfin right here, buyers can now take their time touring and considering homes before making an offer. Still, selection remains very limited despite supply being up, as few homes are being listed and even fewer are selling. So the reason there, here's my opinion on this one too. Once again, my opinion, but this is what I see. A lot of these realtors locally, what I'm seeing is still listing at ridiculous prices that they think are still listing at ridiculous prices that it's not going to happen anymore. That's when, you know, things were selling overnight, bidding wars were happening. That is completely gone now. We are going back to a normal market. So what that means is if your house sold for $1 million in the crazy times that there were, you got to list your house for 900,000 for people to get to put attention on that specific home. A lot of these realtors aren't doing that. They're getting listings because they're telling people they can get the X amount of dollars and higher amounts for them. There is truth to that. You can still get higher amounts for your home, a lot higher than it was 2 years ago, but you're not going to make what the ridiculous amounts that were being made 4 or 5 months ago. That's gone. And houses are going to be sitting longer on the market. People are getting more options as new listings pop up. The listings that are selling are all the ones that are priced where they should be because prices are stabilizing a little bit. So you can't overlist. That's what people are still doing. I'm seeing that. And all those houses are sitting with no attention on them as well. So list smart. If you're going to list your house, you could still make good money doing it. Your realtor should be helping you out with that too. I do all kinds of assessments and everything when I list a house for somebody, obviously, too. So if you want to list your house, you can call me too. But anyway, so George Retu, manager of economic research with Realtor.com, we also expect a growing number of homeowners to bring properties to market, taking some pressure off high prices and offering buyers more options. Exactly what I said, supply and demand. Economics 101, even though our government doesn't abide by that.
Come on, man. What are we talking about? Come on, man. Come on, man. Come on, man. Come on, man.
It's just common sense. So let's go into the local market data. So we're seeing we have been in a deep seller's market for a while now, obviously. You know, but we're starting to see signs, like I said, and especially in the data of things shifting more towards the balanced market again, back to normal, where things are going to be listed a little bit longer now. You got to price them right. And then also, you know, people are going to have more options as well. So things aren't going to just sell right overnight. Nevertheless, we're still seeing homes go under contract, you know, quickly if they're priced right. So let's go into Naples, their stats real quick. So Naples real estate activity for the last month, overall inventory is up 81% overall the last month. This is June to June. So 81% increase in inventory. Overall pending sales were down 37%. So your median sale or your median close price overall is up 32%, which is good. Your new listings are a little bit down 0.1%. And then overall closed sales is down 38%. And then days on market is also down 40%. So That's your Naples stats right there. Now we go into Marco stats. So total inventory right now on Marco, and I've been noticing this, it's down 20% year over year. And then also the total closed is down 57% compared to last year. Total volume sold obviously is down also for 53%. So your volume sold is going down. We're seeing a lot of decreases. It should be interesting coming up here. Obviously, things change month to month. So I will see you all in August. I hope you enjoyed this, and thanks for checking out the newsletter.